Good evening, everyone. Monaco64, Sunday, March 7th, 2021. Let me know if you can hear me. Billy is over here, as you can see. He's asleep as usual. I had a nap on the sofa today. Yeah, that was a good nap. So you guys can hear me. That's good. I'm going to wait. I'm a little earlier than usual, so I'll wait to start talking about the main topic, which is the fact that they've passed that 1.9 trillion stimulus in the Senate. And yes, it is a Keynesian delusion. That's what we're going to talk about. Someone asking a question, Jay Rush, can you explain Basel III and how it will make gold a tier 1 asset? Well, it will make Basel III is just the rules that are instituted by the Bank for International Settlements for the too big to fail. Yeah, I had a nap full of hope. I went for a long walk today around the park. When I came back, afterwards I had a shower and everything, and then I was in the study here with Billy, and I just needed a nap. So that was good. So yeah, it will make gold a tier 1 asset. That means that gold banks can hold gold just like they hold other currencies. That's all it means. And it will be up to the too big to fail banks, of course, to hold that gold if they want. And I think it's one of the reasons why we've heard that JP Morgan has a lot of silver and gold. I think that will be the future. And it's not gold on COMEX. It's not futures. It's real unallocated physical gold. So it can't be hypothecated. So let's have a look. We've got 269 viewers already, even though we still have 3 minutes to go. 83 likes. That's good. No says he bought a gold sovereign. I couldn't resist the low prices. Yeah, sovereigns are a very good coin. I think they're one of the best coins to carry around if you're going to have to move around long distances and to different countries. There's a story about the US Air Force pilots, and they probably still do. They carry around sovereigns, especially in their missions overseas, because if they get shot down, that will be accepted everywhere. It's a recognizable coin. It's the coin of the British Empire, really. The current sovereign really started out in 1817. So yes, it's what the British Empire was backed by, the gold sovereigns, and I guess the Royal Navy as well. Yes, there are sovereign rings. I don't have a sovereign ring. I'm not really into that. When we went to France, my wife and I bought her a French franc gold coin ring, which is really nice with Napoleon III. I think it's a 40 franc coin, so it's quite valuable. My wife liked that coin. It's kind of it's not flat. Most of the sovereign coins are flat. They got the coins flat. The French one is, they've bent it over like that, so it fits the finger. Thomas Adams, thank you for your super chat. So we're almost 9 o'clock here in London. Music lover, forever. Do you see there being much significance to the big drop in short positions being reported in gold? I think so, and it makes sense because the bullion banks are trying to cover their big short positions because they know gold is going north. So, and the data, of course, I spoke about that in my video yesterday, and I was really shocked. I got so many views for my video from yesterday. I think almost 36,000, which is quite rare. even though my viewership has increased. So, and I think when we get the COT report this coming Friday, it's going to be, they will have covered even more. And I think eventually they're going to probably even go long. They're going to be long the bullion banks eventually, and then gold will be a lot higher. So here we go. It's 9 o'clock. Yep. The title is Senate approves 1.9 trillion of Keynesian delusions. Keynesian delusion. So why delusion? Well, because I think I would think by now that the people in charge of the central banks, the people in charge of our economies for the last 50 years, especially after Nixon closed the gold window, we've become much more Keynesian. And why is that? Well, because under a fiat currency system, there's no anchor, no limit to how much the banks and the politicians can create and can borrow and spend. So there's no discipline. But the flip side of that is that eventually the currency collapses, the economy becomes, how can I say, moribund. It doesn't grow as much. Why doesn't it grow as much? Well, because we have more and more debt to sustain it. Yes, they're keeping interest rates low and yields low, but the flip side of that is that the currency is going to buy less and less. And yeah, it's not going to work. It's a delusion. I think we are at the end game of that. And that's why being outside their system as much as possible is really important. And by having physical gold and silver, that's what I'm doing. If you want to do that, it's up to you. It's my opinion. I just saw someone saying that gold is going to 1400. I could care less where gold goes in terms of fiat currency, because I know that in a year, 2 or 3 years, the fiat currencies are going to be worth so much less, and I want to be outside the system. Good luck, though, trying to get gold when it's at 1400. There won't be any around physical. You might be able to play around on the COMEX. So yeah, that's the Keynesian delusion, that we can, as countries or nations, do the wrong thing in terms of our finances and our economic lives. They think that nations can borrow an infinite amount of money and keep borrowing and borrowing, that things are going to get better. And when you look at the individual or a household, if we did that, we wouldn't be around anymore. And why should it be different for nations? Yes, I think there will be a big rebound in the economies this year, but it will be because of the fact that they're going to reopen a bit. So yes, that's normal that we will see a rebound. But it's all going to be also, a lot of it is going to be a sugar rush from these almost 2 trillion. It's going to help people at the bottom of the economic ladder to spend more, to go out there. And there are people sometimes that don't even have jobs. So it's not going to be a healthy thing. Am I saying that bailing out Wall Street was a healthy thing? No, I don't agree with any kind of Keynesian interference. So yes, the GDP data are going to look better. The unemployment numbers, all artificial data, are going to look better. They're going to say, oh, look, and even under President Trump, they said we have the greatest economy, but they never looked at the flip side of that. That was the huge deficits that were already in place under the Trump administration. And I'm not having a go at Trump. I think he's, I'm just looking at the economics. They were running already almost 5% of GDP budget deficits under the greatest economy. You'd think under the greatest economy, you'd be getting a lot of tax receipts. that you could pay, finance government without having to go into so much debt. But now it's going to be even worse. It's going to be 15, 20% of GDP deficits. So yeah, they're going to give you all these beautiful numbers, but if you look under the surface, or you flip the coin to the other side, the debt is going to going through the roof. The deficit spending is going through the roof, and they think that this can kickstart the economy, so they can pay off the debt and pay off the deficits, or lower the deficits. You don't pay off the deficit, you pay off the debt. But it's not going to work, because the government has become so big. The public is so dependent on the government now. Pretty soon, 3/4 of the American public are going to be paid by the government. That doesn't make sense. That's the road to ruin, I would say. Tricky Dicky, thank you for your super chat. Chancellor robbing the public with freezing allowances and council tax rises to punish the public, when Bank of England just gave the money to Her Majesty's government. Well, that's right. They're not here. People need to understand that the government, the treasury, or the chancellor anywhere in the world, they're not there to help people. They're there to really extract wealth from them. They're there to keep stopping them from becoming free and independent. So that's why I didn't even listen that much to this budget. But yeah, what they're going to do, Tricky Dicky, is they're going to inflate the system. So people are going to start earning more nominally. It's not going to be in real terms. And yes, they're going to be paying a lot more tax, because they're not going to lift the tax brackets. Okay. Patrick Bateman, thank you for your super chat. Have you looked into Cardano? Thought you may be interested, created by co-founder of Ethereum. I've heard of Cardano. I think it's similar to EOS. To be honest, I'm not too, I do cover crypto. I did cover it a few years ago. The only altcoins I'm involved right now are the crypto that I earned for posting on Library. It's the Library coin. What else? Steam. I post on Steam. I get a lot of Steam coin. I post on Steam it. I post on Hive. And where else? On DTube. So I earned quite a bit of those altcoins, and I think crypto is great when it has like a function, like places where a social media, and you earn their coins. And what I do there, these coins, I usually after I claim them, I exchange them for Bitcoin, and then from Bitcoin I exchange them to Ripple or Litecoin. And why do I do that? Well, because once I have those coins, it's cheaper to send them to my Wirex card, where I have access to exchange it for pounds. So that's what I do. But I'm not really looking at projects like Cardano at the moment. No, Tyler, Nasara, it's a pipe dream. Gasara, Nasara. Also, I would say this quantum financial system. I was actually listening earlier today to Cliff High. I like Cliff High. I recommend you watch. Cliff High has got some good points. Don't agree with everything he says, but he said Gasara, the Iraqi dinar thing. These are just scams. So Nasara, forget about it. The only thing that will save you, in my opinion, is keeping a sound economic order in your household, because the word economy comes from managing your household in Greek. So and I think having sound money is part of that, and not spending as much as you bring in, so you can keep a surplus, not going into debt. Some people, if they're doing well, they might want to go into debt. 25 years ago, I guess, I went into debt when we bought our first house, but I was still young at the time. So now, so it depends a little bit on your age as well. The money fork. What are your thoughts on the impact movements like Wall Street Silver have on private demand for physical? Yeah, I think they kind of awakened a little bit. They raised awareness of the silver market to people. Uh, I was always a bit skeptical that silver was going to squeeze right away. I think there was a little bit, people kind of got ahead of themselves because the silver market is very different from GameStop. GameStop is a small company. Silver is very strategic metal commodity. It's been money for thousands of years. It's really important to the military industrial complex. It's really important to some big industrial corporations all around the world. So it's going to take longer. But if you listen to Cliff High, he's been. I used to do the uh, summary of Alta reports back when I started this channel back in 2016, 2017. He doesn't do the Alta reports anymore, but he's been calling for silver to become more and more strategic. And I think he's right. So eventually we will have a squeeze. And the only way for them to have the supply of silver increase, because uh, silver is going to be really important for technology, for this new green world. I'm not saying I agree with it, but be as it may, it will be. And there's going to be a lot of demand for industrial silver and monetary silver. And the only way for them to get more silver, by them I mean industry and everyone else, is to allow the price to go up. Because if you allow the price to go to, let's say, $500, there's going to be a lot more people trying to find silver, mine silver to sell it. It will be more cost effective. So that will be the solution, I think, to the silver shortage. But at $25, $26, it's a joke of a price, I would say, silver. And I do think that we could see a huge drop in the gold to silver ratio. Does that mean that I'm getting rid of my gold? No, that just means that I'm going to probably, if I buy more precious metals, I will focus probably more on silver. And I've exposed also a lot of my holdings in miners to silver miners. Teresa W., thank you for your super chat. Do you think the real estate is still a safe investment, even if it is expensive? I think real estate is always a good thing to have. Um, short term, and by short term, I mean 5-10 years. Yes, there can be a lot of movement in the price. We had the crisis back in 07 and 08. But if you look at the very wealthy, the very wealthy families all over the world, they have a lot of property. And real estate is also a very good hedge against currency debasement. If you have real estate, if you have a house, apartment, and the currency collapses, you still have something that's worth something. It's much better to have than cash in the bank, I would say. But you also have to be aware or careful if you leverage too much. I mean, I know Robert Kiyosaki loves to take on debt to buy real estate, and he's been very successful with that. But we can't all be Robert Kiyosaki's, right? So you got to be careful. There's a story from my uncle back in the 80s in Brazil. He's a doctor. He's getting on now. I think he's about 80, 82, but and I think he still practices because he's that kind of person. And he back in the I think it was 87 or 88, there was a currency collapse in Brazil. And a few days before or a few months before, he went and bought this house, small house, nice house, so he could have his consultancy, his medical practice there. And he exchanged the sale, the purchase. He paid the owner of the house that sold him the house, got the house, and they exchanged contracts on day X, and then on day X plus one, there was a currency collapse in Brazil. They converted the old currency to a new currency. And the guy who unfortunately sold him the house, he got caught holding the bag. And my uncle was very lucky that he was able to exchange it the day before. Did he know there was going to be? No, it was just pure luck. So yeah, hopefully that answers your question about real estate. And of course, it depends where you are around the world. Billy needs a Wall Street silver shirt. I designed something, a mug. Someone asked me the other day, what was it called again? Oh yeah, Be Right and Sit Tight, with a nice 1904 double eagle $20 coin on both sides. So yeah, Be Right and Sit Tight. Billy silver, Wall Street silver shirt. I'll have a look into that. Petrobras, yeah, that's the Brazilian oil company. Petrobras, yeah, it's kind of like a monopoly. I think it's partly owned by the government, and it's partly also traded on the stock exchange. So there is private ownership. I haven't really looked too much into that. I saw that a few weeks ago. The president of Brazil made some statements, and it really hurt the value of that company. But it's not something I keep. But it should do well if oil prices are, keep going up. So let's go. I've got a few articles here because we can. Someone, it was one of my viewers. If he's watching, he will know this article. He sent that to me, and I think it is the New York Times, but it is a good article, and this is something to do with this. How can I say this stimulus package, 1.9 trillion, and I've read this article today, so I could talk to you about it. It says, so as you can see, it's the New York Times. It was one of the viewers who sent me. He sends me a lot of articles. Thank you if you're listening. I've never seen anything like this. Chaos strikes global shipping. The pandemic has disrupted international trade, driving up the cost of shipping goods and adding a fresh challenge to global economic recovery. So I'm not going to go through it. I'll just tell you about the article and what it's about and how I think it could impact the economies all around the world, especially in the US. So basically, in the last financial crisis in 08, the demand, global trade dropped massively. People didn't, the shipping, global shipping dropped. So, and the important part, one of the biggest parts of global shipping goods and goods are the containers. Containers, they were invented, I think they created in 1956. So when the pandemic started last year, a lot of the shipping companies and trading companies, they thought, oh, this is going to be really bad. So they pulled back on the production of containers. They thought, well, global trade is going to go down. And even though they shut down the economies and we didn't do things like go out for dinner or go, travel, people found other things to buy. And actually, the demand for containers went through the roof. And this has disrupted it. Up until now, there's too many containers that are in North America or in Asia, but are not in Europe. And it's really hard to get containers, and they're not ready for it. And the other thing they noted is that with the new stimulus package, you're going to get even more demand for goods. They talk about how people were buying a lot of treadmills, for running indoors, office, to build their office in their homes and other things. And a lot of that came from China. And the other thing they said is that, let's say they deliver these goods to LA or Long Beach, the port. The containers there are empty. In the past, the grains from the Midwest would come and fill those containers, right? But now they're needing the containers, and they're being paid more for the containers somewhere else. So they're not being able to ship the grains from the US to the other parts of the world. It's all messed up, basically. And I think from that article, they say that it could be disrupted until for another year. So those are the consequences of government action, unintended consequences. And I think it's going to be another reason why you're going to see a lot of rising prices, a lot of shortages. So yeah, that was a really good article. Thank you. Thank you. Gordon Hamilton, thank you for your super chat. Lily Robbins says demand is unprecedented for silver. Many old guys say so. So when will JP Morgan paper game break? Well, from what I've listened, JP Morgan is in all the way in physical silver. But right now, there's a few big bullion banks that have the big short positions in silver. But I don't think they'll be able to keep it going for much longer. Hold on, what's going on? Can you hear me? What's happened? No? Can you guys hear me? It looks like the I'm not sure what's going on here. Can you? I don't know if you guys can hear me, but I can't see the chat anymore. Oh, I can see it, but it's frozen. Let's try again. All right. Okay. It's okay for me now. Sorry about that, guys. I thought the live stream had dropped, but it hasn't. Excuse me. We'll get back to normal. I was a bit concerned there. Okay, that's good. Yeah. Oh, that's good. It was only on my side. Sorry about that. So I want to talk a little bit about the bond market right now, because as we know, treasury yields have been very volatile, especially since they went through 1.3%. They got up to like 1.63% on Friday after the strong data. And then they dropped back to 155. The stock market went up 500%. Why do I think that, some people, I even said in my video from yesterday, it could have been intervention, the PPT, and maybe so. But I think it was front running because people knew that the Senate would pass this stimulus package. And I think that's why we saw a big rally at the close of the market. And someone's saying get better internet. Hi, Thomas Adams. My internet is really good, actually. So, yeah, I don't know what you're saying. Get better internet. This is the first time this has happened. I don't even know if it's because of the internet. So there you go. Some people, I'm not having a go at you, but it's just gratuitous opinion that doesn't really anyway, but that's why I think the stock market rallied a little bit, because some of you might know that politicians in Congress, they're not liable to the front running and insider information rules. So I wouldn't put it past the people in Congress and Senate having gone in on Friday and told their brokers to buy stock for them because they knew this stimulus was going to go through. It could have been a little bit intervention to keep interest rates low. But what I want to talk about is this statutory leverage ratio, SLR, that everyone's been talking about. And basically that's it's got to do with the reserve requirements that banking institutions in the US have to have, for regulatory reasons. These rules were passed after the 08 crisis because the banks were a bit out of hand. They got too leveraged. So it was probably a good thing. But what happened last year with the financial crisis and the fact that the Federal Reserve said they're going to buy as many treasuries as, QE, no limit to QE. They had to have, they removed that. So there's no reserve requirements for the too big to fail banks, but it was only supposed to be till the end of March. But now you can see here the Democrats, they want that to be implemented back. They want the big banks to be regulated again. Am I for the big banks? No, but what this will do is that this will really hurt the bond market, and it would actually hurt people like Elizabeth Warren and Sherrod Brown, because that means that you could put the US Treasury market at risk, because instead of buying treasuries, the too big to fail banks will be getting rid of treasuries because they're going to have more reserves. So I don't think Elizabeth Warren or this guy Brown understand what's going on. They're just saying, "Oh no, we have to get." It says two Democratic lawmakers have warned the Federal Reserve and other regulators that it would be a grave error to extend looser capital requirements that were introduced for U.S. banks at the start of the pandemic. So they don't understand the bond market, and that these too big to fail banks are the primary dealers. You see, when Uncle Sam borrows in the debt market, it's these too big to fail banks that they buy in the auctions and then they sell it to their clients. But if you're going to take away this zero SLR requirement, they're not going to be able to buy as many treasuries, and treasury prices are going to go down and the yields are going to go up, and it's really going to hurt people like these people and the people in Congress as well. So they even wrote a letter to they want to the letter from two of the most influential lawmakers in Congress with oversight of Wall Street comes as the Fed, FDIC Corporation, and Office of Controller of the Currency must decide whether to extend the temporary rule change to the supplementary leverage ratio, which was introduced April last year. And I don't think they understand how important this thing is, but I think it's a big risk to the Treasury market. That means interest rates could spike higher. This is something we need to keep an eye on because, and this is what, let's have a look here. Someone here talked about, here we go. Banks have cautioned that a failure to extend the relief can make it more difficult for them to absorb the deluge of cash the Fed is pumping into the financial system, as well as to facilitate trading in U.S. government debt. They also said it could limit their ability to extend credit to cash-strapped companies and consumers, will also extend credit to the U.S. government, I would say. So at the end, it says here, you know, Warren and Brown accused banks of using the pandemic as an excuse to weaken the post-crisis regulatory reforms. Yes, but they have done maybe that, but they're also helping Uncle Sam. Um, so it says Powell, Fed chairman, said last week the U.S. central bank had yet to make a decision on SLR. With regards to the letter from Warren Brown, a Fed spokesperson said, "We have received the letter and plan to respond." So, yeah, this is something I wanted to talk to you guys about. I think it's really important. So, and you know, as I've said before, treasury yields will affect, you know, rising treasury yields will affect the whole economy, the stock market, everything, because it's at the base of the credit system, U.S. treasuries. So we've got a Fed meeting starting on the 16th of March, ending on the 17th. They might announce it then that they will extend the SLR, or they might leave it to the last minute. And if they don't extend it, we got to be prepared for a lot of volatility in the financial markets, in my opinion. Miles, thank you for your super chat. Are emerging and foreign markets safe going forward? No, I don't think so, Miles. I think when the U.S. markets come under pressure, I think they're going to be even under more pressure, the emerging markets and the foreign markets. They're not immune. Thomas Adams, he said, it's all right, Thomas, no problem. It's difficult to know when people are joking or not online. Sorry about that. And I didn't really mean it. Anyways, thank you for your super chat. Lumber prices are stupid right now. Yeah, I think I haven't really looked too much into that. I see that the uneducated economist talks a lot about that. My wife likes listening to him, so she tells me sometimes about it. It could be because a lot of people are moving away from the big cities. So some of these people they have the wherewithal. So they move into a small, town, and they decide to just rebuild a new house because they can't find what they want. So I think that's part of the problem. Mario, what happens to UK premium bonds if rates go negative? They probably won't be paying much either. You need to check. Yeah, they will follow suit. But premium bonds in the UK, they're different than normal bonds because it's almost like a lottery. You can win a certain amount of prize if they pick your premium bonds. But I would say it won't be. They every kind of debt instrument will be affected if we have negative rates. That's still a big debate, whether we're going to get a spiking yields. Um, you know, there's still a lot of people who believe that yields are going to go back down. They could be right, especially if the Fed comes in, if they extend the SLR, if they say they're going to keep doing more and more QE or yield curve control. But all that's going to do is going to uh, it, it's going to make it deflationary instead in terms of the economy, because it's going to allow big corporations to borrow even more, to invest in technology, automation even more. It's going to hurt labor. Low rates don't help labor because companies can easily borrow and like substitute labor. But on the flip side, I think the currencies are going to continue to be debased. And we're going to see that through the price of gold and silver. I think that's the way Jim Ricketts thinks. He looks at deflation. The deflation he talks about, I think, is more economic malaise. But he sees gold a lot higher, and to me, that's inflation as well. it's confusing. But one strategy I think that could work, and that's if you want to buy treasuries and finance the deep state. But I'm not going to judge anyone for that. But is to be long gold and silver and treasuries. And you can do that through ETFs, of course. If you're a big investor, you can actually buy the government paper. I personally not really looking to do that. Miles, please get George Gamow on. That would be extremely educational. Uh, I don't know about, George Gammon. He is good, but nah, I my channel, I do interview people, but that's not the be all of my channel. I like doing what I do on my own. George Gammon, the thing about George Gammon, he is a good communicates well. That's he's been in the media. I think he was a real estate guy up until 2019, and his channel picked up a lot. But I've been on with him with rethinking the dollar and some other guys. But no, I'm not thinking of having George Gammon on. I don't really see what George Gammon could add to the channel. He is good, like Lorraine says, love George Gammon, but everything George Gammon talks about is things I've been talking for years. So anyway. Yeah, I like to have people that are actually, I have been on Lynette's channel a few times. She has been on mine. I might have Lynette on, in the future. And I like to have people generally that are not into what we're doing here, like George Gammon or I like to have someone from outside, you see. So like Rafi Faber is someone I've found last year, and I think he's really interesting. I have contacted other people, but they haven't come back. But don't worry. Chris Conman, Mario, when Yellen starts releasing 1.1 trillion to the market over the next few months, will it cause backwardation in commodities? Yeah, some people do think it will, because I think she's going to release 920 billion by the end of March. So what that will do, that will drive short-term rates like 1 month T-bills, money market funds. It could drive them into negative. They could become negative, the short-term rates. So yes, it could cause backwardation into commodities, because instead of holding your money in the money market where you're going to get a negative return, you buy real things that don't have a negative return. So yes, it could cause backwardation. I think Rafi Faber was on a week or two ago, and we were talking about that, and we're already seeing the backwardation come into a lot of commodities. And gold and silver, I think we saw a little bit of backwardation last week in gold. It could definitely create backwardation. It could be very serious. Janet Yellen is not a banker, or she's never worked in the financial markets, even though she was chairwoman. Sorry, I was going to say chairman, chairwoman in the Federal Reserve. She's not a banker. She doesn't understand financial markets. So she's doing things like that, and she doesn't think of the consequences. Tom Taylor, thank you for your super chat. So yeah, it could definitely do that. One-eyed ratch, one-eyed rack. Okay. What are your thoughts on spot price of silver and gold this upcoming week? It's always hard to predict, in the short term like that. Since 2002, I've been telling friends, colleagues, and then later in 2007, I wrote articles saying that the way forward for fiat currencies, that they're going to keep sinking versus gold and silver, because they're just they can be created out of thin air. It's the simple law of supply and demand. and gold and silver, you can't do that. But next week, I don't know. I think there, gold and the spot price, they're heavily undervalued versus physical price in the real world. So I'm going to explain to people, though, what the spot price is, because I listened to a video interview I think Chris Marcus did with Andy Schechtman. And actually, Chris Marcus, I like Chris Marcus. I'm not having a go at him. I've been on his channel. He's been here. He was asking Andy Schechtman, what's the spot price? They didn't know what a spot price was. And he asked Andy Schechtman, and it looked to me that Andy Schechtman didn't know what the spot price was either. So the spot price is basically when you buy, it's basically in the interbank market, Wall Street, City of London, Frankfurt, in the foreign exchange market. When you ask for spot prices, when you want to buy a currency versus another currency, and you want to have it delivered basically for cash immediately, and spot in the interbank market is 2 days. So if I bought gold spot tomorrow, let's say on Monday, I'd have to pay cash for that, and the gold, and the trade would be settled on Wednesday, and I'd receive the gold, and the seller would receive the cash. That's the spot price. So yes, and unfortunately, the spot price in the interbank, a lot of it is just like paper unallocated gold. So they're not delivering real physical gold. It's also, there is a future that is not, the future for delivery. Let's say March right now, they call it the spot future period, where delivery is basically immediate or 2 days. But what do I think gold, the spot price is going to do this week? Well, just to give you an example, a good friend of mine called me today, and he's the guy that I came to work in London for back in 1992, and he's still in the city. His family is quite wealthy. He manages a lot of his own family's money. He is a bond guy. He's still very bullish bonds. He thinks treasury yields are going to go negative, and he's got a lot of treasuries. But he's also got gold. And guess what he told me today? Well, Mario, tomorrow my brother and I, we're going to buy gold. And I said, well, you need to buy physical. And he said, no, we're doing it through our bank. And I said, that's a mistake. And he said, no, this is what we do. And I think, yeah, so he's buying gold tomorrow. And yeah, quite a big amount. But he's probably going to be doing it through the interbank market. I said, you probably won't be able to take delivery of that. And he said, well, that's the way I want to do it. But so I think people are starting to realize that gold is oversold, the spot price at least. I was seeing that the premiums are still quite high. If you want to buy physical gold coins and bars, I think it can range from 1,800 to 1,900 right now. Dmitry Shmerkovich, thank you for your super chat. What, in your opinion, sir, what, if anything, scares our overlords? Thank you for your work. I think what scares them is what we're doing, in this, what I do, what other people like Chris Marcus does, what other people in the gold space, alternative space do, encouraging people to get out of the system, to have physical gold, to be self-sufficient, to not borrow and play the game that the bankers do, because they want to keep everyone on the hamster wheel. I think that's what scares them. Yeah, really. And I think the other thing that scares them is people wanting physical gold and silver, because we seem to be a lot of people, in this community. But if you compare to the general population, we're a tiny percentage. But if you can get that tiny percentage up to 2% of the population, and everyone's doing what we're doing, that would clean them out. I think that's what they're scared of. And that's why I think the Wall Street silver short squeeze movement is quite interesting, and I think it's going to keep growing. And some people say, oh, young people are only into cryptos, but that's not true. I look at Instagram sometimes, and there's a lot of young people doing a lot of stuff with silver, coins. Yes, I think young people are starting to wake up also to the fact that, this is a really nice thing to hold. It used to be money. So there you go. That's what they're scared of. Lord Humongous says, Mario, I want to design a Super Mario crypto coin. Wow, it's funny you should say that, because I don't know if all of you have heard of Dogecoin. It's a coin that's been around a long time. Doge is a play on words, the Doge of Venice, and a dog, the word dog, and they use the Shiba Inu as the symbol for this Dogecoin. And I looked the other day, Dogecoin is worth $6 billion market cap. So I did a little survey and I put on Twitter, how much would you value the Billy coin at? It's the competition to Dogecoin. Instead of being the the cryptocurrency for Shiba Inus, we have Billycoin, the cryptocurrency for Shih Tzus. And I would bet that I could maybe get one of these people in the crypto space to start a coin called Billycoin, and we could get some traction on it, and I could actually make some money on it. But it's not something that I think is right to do, because it's a scam. That's how I look at Dogecoin. So, but there you go. Joker Alpha, are you familiar with IRS history? Yeah, I think it was created during the Civil War, and then they put it aside because they didn't need it anymore. And then back in 1913, I think it was put back to life with the Federal Reserve Act, because they knew that they're going to, with the central bank, they will eventually become a fiat currency system. The government was going to borrow a lot more because the governments wanted to land on the back of the government debt. So you needed taxes. So that's how I know. That's how I see the history of the IRS, and the income tax came along at the same time as the IRS in 1913. It was very low rate, and it was only for the very wealthy. So the majority of the public didn't think much. But then, it crept to the general population. I recommend for people to watch America from Freedom to Fascism. It's a documentary by Aaron Russo. He passed away. He's the guy who he's the guy behind Trading Places. And he did, in this documentary, he actually goes to the IRS to talk to them about the income tax scam. So there you go. Polar Man, gold is headed for 1300. Hold on to your cash. Well, Polar Man, one thing I would say is that historically, gold is cash. You see, the paper dollar bill or the Bank of England note you have is actually a promissory note, and you exchange that for cash or specie, gold and silver. I don't see gold unless we have a collapse of the financial markets and a collapse of the stock market, or everything. I can't see gold going to 1300. Even if it goes, so if it goes to 1300 and everything collapses, I would see the Dow maybe at 2000 or 1300. So it's all relative. Yeah, I just can't see how that could happen, the way they're inflating the system. And if you don't understand how they're inflating the system, then you haven't been on this channel that long. And I recommend you do stay on this channel so you can learn about that maybe. Dmitry Shmerkovich, Thank you again. How for your super chat? How would they act when they're scared? What are the clues to recognizing fear? I guess you mean the powers that be. Well, when they come, like they were scared last March, and they had to come out and say, "We're gonna do whatever it takes." We're gonna do unlimited QE. That's when they're scared. That's what they did in 2011-12 when Mario Draghi, the president of the ECB, when the Euro project was collapsing because of the sovereign debt crisis. He said, we're going to do whatever it takes to save the euro. But the flip side of that is going to be more and more debt, more and more debt, more and more inflation, more and more higher gold and silver prices. And that will keep Wall Street and the governments going. But for us, the general public, it's going to be more and more lower standard of living. And that's why I think it's really important to try to keep a hold of your gold and silver, to try to live within your means, stay out of debt. Graham Hobbs is here. Hadn't seen you, Graham. Where we go here, Lord Humongous. Moneconomics is the best economics on the planet or plane. Yeah, planet or plane. I know what you mean there, Lord Humongous, about the plane. Love button, wouldn't 1550 on gold be a 50% retracement? I guess it depends from where you measured the move. I don't know. The thing is, right now, a lot of the Wall Street people, the paper bugs, they're all really happy because gold is dropping, and they're trying to like play it, kick it even more by coming with these really outlandish, how can I say, predictions for gold. And you never know, it could go there, as I said, if everything implodes. But with what's going on right now, we just had the 1.9 trillion passed in Congress. In the Senate, it's expected to go through this week. They're not going to be able to stop it. And I've spoken about the fiat money inflation in France, how after the French Revolution, France was, politically very unstable. The monarchy had been overthrown. A little bit like the U.S. right now. I know there's no monarchy, but it's very unstable politically, very divided, and we've got a lot of debt. A lot of poverty, a lot of problems, division, social, economic. And what the French did at the time was, and it was unheard of, they started printing assignats or paper money, and they backed it by the church property that they confiscated during the revolution. And they were very, very, the National Assembly in France was very skeptical, and they're very careful before they started issuing the paper money. And it was backed by the church. And they said, we're going to do it. It's going to be a one-off to kickstart the economy, right? That was Keynesian fallacy back then. And what they found is that, yes, the first issue of assignats helped the economy. It did give it a bit of life. But then after a while, after a few months or a year, that, the economy went back down, no confidence. And then they had to do more. And it was always more. And then then it would pick up and then come down again. And eventually, they issue so much of these assignats, and it always had less and less effect because it was debt, and eventually it all imploded. And I think that's where we are right now, and that's why, yeah, if gold goes to 1,500, does it matter? Because the way I see it is these fiat currencies are going to go to zero. So if it goes to 1,500 or 1,600, 1,700, but then, we see it at 20,000 next year, And let's say right now you're waiting it to go to 1,500 and it doesn't go. And because of those $200, you didn't get in, and then all your fiat currencies wiped out in a year's time, you're going to be kicking yourself. That's what I'm trying to tell people here. It's not a trade. You're not buying gold to make more fiat currency. You're buying gold to protect your savings. Girl Olgi, thank you for your Norwegian kronas. Have bought gold jewelry lately, bought it under spot price. Good deal. Yeah, about 1.5 pure. Yeah, I mean, you need to do your homework. There, it's you don't only have to buy gold and silver from a bullion dealer, jewelry sometimes, from jewelers sometimes, or like pawn shops. You can get good deals, or you can try to get a private deal if you know someone who wants to sell their jewelry and know nothing about gold. You can tell them, I'll pay you this much for it. And then you weigh their jewelry and you do that. I bought some silver coins on Friday and I received them already yesterday. And I got a price of 27 pounds per ounce with the VAT. That was from a coin and metal dealer that I know from Bromley here in the UK. And he's not a bullion dealer or a coin like a per se. What he does, he's more into numismatics, but he has people that go and sell them, silver or gold. And when he has stock, it's probably better to buy from him because he doesn't hold gold and silver to sell. He just trades, you see. So there you go. Yeah, get to know your bullion dealer or your coin dealer, and tell them, whenever let's say, oh, if you get someone sell, let me know because then I'll buy from it, and he might make you a better price. Paul of the Wild. I like that. Paul of the Wild. It's a play on Call of the Wild, one of my favorite books, Call of the Wild. Jack London. Thank you for your super chat. Thanks for doing what you're doing. Thoughts on buying VXX calls? Is that like a call on volatility on the VIX? I mean, the problem with, I've traded the VIX options here in the UK last year around February, March, and I did quite well because things kicked off. The only problem with options, yeah, and buying calls is not risky because the only thing you can lose is the amount of money you put in. It's just a matter of it playing out, right? If it doesn't happen, then you lose your premium. We could be in, yeah. So if you have a feeling for the market and you think it's gonna, go either way, I prefer doing the puts though, because I think the puts have when the market goes up, if you buy options and calls, volatility doesn't go up as much. But anyway, hopefully that helps. Whoa, it's almost an hour gone already. Lily Robbins says, I bought a newly released 5-ounce coin on ST Bullion last week, the New World Order coin. I knew it was a good price at 185. It sold out in half a day and was on eBay for 399. Wow. Yeah, Joker Alpha, Venezuela took 3 months to go into hyperinflation. Yeah, in 2018. Yeah, it happens overnight almost, and I think they're still having problems. I forgot about this. I'll show it to you guys. This is the same guy who sent me the other article about the containers and the global trade. So here we go. Talking about Venezuela. Venezuela to issue a 1 million bolivar bill, but it's worth only 50 cents. amid raging hyperinflation. So their hyperinflation has kept going because in Germany, it was pretty much over after 6 months. But I think the problem with Venezuela is that, yeah, they're kind of blocked from the outside world of finance. So they're stuck with their crappy bolivars. So 1 million bill that's worth 50 cents. So am I saying that's going to happen here in the UK and in the US? No, but it's not impossible. Just because we're not Venezuela doesn't mean to say that it couldn't happen here. Um, I might keep going on a little longer today. So we've done an hour, but I'll keep going. Yeah, just because it happens in Venezuela doesn't mean it can't happen here. If Venezuela was like one of the richest countries in the world, actually, back in the 1950s and 1960s, and now it's a basket case. So who knows? Yeah, everybody's a millionaire in Venezuela. Yeah, that's a bit. Germany telling savers to get out of banks as negative rates kicking in the Eurozone. Mr. Ashford, have other hyperinflation had big global impact? Um, Not really, because a lot of times it happens in smaller countries that are not as important, that don't have the reserve currency. But, you know, if it, I think it will happen in the US, and it will be disastrous for the whole world because every currency in the world now has a lot of backing. Yeah, dollar backing because global trade is done in US dollars. That's why it's the major reserve currency. And someone made a comment in one of my videos the other day and said, "Oh, you can't have a hyperinflation of the reserve currency." And and to that person, I say, think again, because the reserve currency now is not really backed by much, and the U.S. has spent a lot of its capital, you know, political, geopolitical, social, economic capital, and the U.S. dollar or the Federal Reserve note is not backed by gold anymore. So I could see a hyperinflation, and I've been calling for it in the dollar. They're going to do everything they can to make it worse when it happens. And what do I mean by that? Well, they're going to keep printing. They're going to keep coming out with the stimulus, and for a while it's going to seem really good. And look at how well the economy is doing, but it's all artificial. And then one day, people are just going to say, "I don't want this currency anymore." And I think a lot of us are already doing that. People like us that stack outside the system. Dan Longano, I had the 10-year bond is in crisis. Uh, well, it's not only the 10-year note, it's the whole treasury market. Yields have been spiking. Yes. Um, I spoke about that earlier in the live stream. But yeah, it's going to be very important the next until the end of March whether the Federal Reserve is going to step in and say we're going to print more money, do more QE to keep interest rates low. Because as I said, treasuries are the backbone of the financial system. If treasury prices go down, bond prices go down, yields go up, the cost of borrowing goes up for the US government, the cost of borrowing for everyone goes up. And the whole global economy depends a lot on credit. And with the amount of debt that we have, it's no good. So, I'll take a few more questions and then we'll call it a night. So I'll wait for a couple of more questions. Super Sinister Suing Show. Thanks. I sent you a super chat a while back. I just wanted to say thanks. Oh, thank you. I didn't see that. I'm sorry about that. Thank you very much. Will Powell announce yield curve control at next FOMC? I think the banks, the big Wall Street banks, CNBC, probably Bloomberg, they all want him to. Whether he does it, we'll have to see. He probably, he spoke to, I think he made a speech the other day and he didn't mention it. Maybe he's waiting for the FOMC. It's on the 17th of March. Lord Humongous says, have a great Sunday. Well, we don't have much left of our Sunday. Lord Humongous probably going to bed soon, but you have a great Sunday, rest of the day. Thank you, everyone. I enjoyed this live stream as usual. Thank you for your participation and support, and I'll talk to you tomorrow. Take care. Bye.